possibly some sector rotation as we head into the last week of the quarter. Friday is the 28th. That'll be the official end of Q2. Gold at 23.38, silver 29.56, oil pulling back a little bit, but hanging above that $80 level. And NVIDIA semiconductors had a hard Thursday, Friday last week with 2 down days, and that did put a little bit of drag and weigh on these recent highs. So if we go to the daily time frame here, this was last week. So the last 1, 2, 3 weeks bullish on the S&P 500. This is the SPY 5-minute. Directionally, we had a move on Monday that was a little bit more directional and kind of bigger directionally than I expected. But it was that. It was Monday direction, Tuesday nothing, Wednesday was a holiday, no U.S. trading, and then Thursday opened higher, faded, Friday gapped lower and stayed. So here we are, the brand new week, 544.39 pre-market, up slightly on the S&P. DIA up a decent amount, up almost $1. The Qs 478 down about $1.70. So tech looking a little bit more sensitive, possibly with semiconductors pulling back slightly. Here's SMH, which had a down week. So that's what the red shaded zone is a down week in semiconductors. NVIDIA as well. Monday, no movement. Tuesday, movement. Thursday, big down day. Friday, gap lower and stayed lower. Also looking to open up $3 or $4 lower this week as well. So 127.01 is a close on NVIDIA, opening up pre-market roughly around 123.55. So things are going to get fairly interesting this week. I do have some trades on NVIDIA, some SPY trades as well. I want to take a look out this week, possibly doing a couple earnings plays. Carnival Cruise Lines have been in and out of that stock since COVID. It's okay. I mean, RCL has been a better performing stock. RCL is Royal Caribbean, but CCL has been pretty decent. Turned a good chunk of profit on that from low owner. I think it was teens. Where did I own CCL? Now let me get back to this chart. There we go. So double bottom here around $8 and was long from $10, lowered the cost basis, got a call the way around $15, $16. If we come back and revisit, COVID crash lows, $10, $8.65, probably consider taking some type of position. If we have a breakout in here, I'll be looking to see if we break above the $20 handle and possibly push a little bit higher. But earnings this week, so that was the whole point. So we have some notables: Carnival Cruise Lines, FedEx, General Mills, Levi, BlackBerry, Micron. Micron's going to be a semiconductor space. Everyone might be fairly volatile. Walgreens, Nike on Thursday. No stocks reporting earnings on Friday. Let me check the chat. Say good morning to everybody. All right. Daniel in the house, Denise here, David here, Willard here, Robert, what's happening? Donna, good morning. Steve, good morning. Daniel, good morning. Nice to see everybody. Jacob, good morning. Ruthann, good morning. Yep, Benji's right here. Right here on the old lap. All right, let's go back to the SPY. Little weather report. Let's see if we have some major news for this week. Let's see here. Apple stands out in Edge AI. Dell Supermicro are the top picks. JP Morgan. Okay, so we've got Apple becomes the latest giant to adopt AI. Risk persists. Brand re-engagement. Okay. Ooh, here we go. This might have some controversy. Jim Cramer says that NVIDIA will outshine Apple, Microsoft in 2025 future earnings. Ask yourself, does any company match Jensen and NVIDIA right now? NASDAQ futures slip as NVIDIA continues to sell off. S&P futures hold up. Valuations will go parabolic, and it'll be a perfect time to sell. Sure. Couple things. Just some notables this weekend. Doing some research. soaking up some content. Just going to make a list of some notable things. S&P 2024. It's the best start for the S&P ever in election year. This is the 13th best start for the S&P ever. The S&P forward PE ratio is trading around 25.1, which historically is high. I want to say 18 is roughly the historical level. But tops, I'm going to put this in quotes, tops have historically stretched to 29 to 30 plus. So there's still some movement for the kind of broad market to catch up. We do wonder that, growth versus value. Will we finally see a rotation coming? So I don't think this is now, but I do think that if we do have, tech bubble, high price to earnings on the S&P that are historically high, and what is proven to be kind of unsustainable where the market corrects, you wonder if there's going to be a rotation where, go back to 1999, we had the dot-com burst, value outperformed drastically over the next 5 or 6 years. We've looked at the S&P compared to the NASDAQ, compared to the Russell, Russell small cap, Russell 200 performing well, Russell 2000 flat for the year for the most part. Dow has come back in a big way. Actually, that divergence continues where you see the S&P and the Qs performing very correlated, and then the Dow was down a little bit through June, and in the last week, as we had a bit of a top on Thursday, the Dow was up. So I have to wonder if at some point, these markets are looking to have some type of sector rotation, some type of index rotation, some type of growth to value rotation, and what that ultimately looks like and how quickly it's going to happen. We'll see. Some other ones. This is kind of the crazy stuff here. Highly concentrated. So your NVIDIA, your Apple, and your Microsoft make up around 31%. No, that's incorrect. 21%? Let me double check that. 21% weighted, which is really, really high. Let me verify that. So we're looking at 21.1%. So the percent of holdings. That might be slightly higher with the close last week, which was the 21st. So I'm going to put over 21% of holdings in the S&P. I think also those three and possibly the top 5 or 10 are responsible for almost 40% of the S&P's gains this year. So to say highly concentrated, that's a bit of an understatement. It is highly concentrated. The good and the bad. The good is if the best stocks like this, NVIDIA, Apple, Microsoft, and other ones, SMCI is on there as well for some of the top performing stocks this year. The weighting's different, obviously. But if those large $3+ trillion market cap companies continue to have inflows, it's going to drag the markets higher. SPY can go higher. Qs can go higher. Why? Because it's market cap weighted. The downside would be like last week. Thursday was a sell-off in NVIDIA. Thursday was a sell-off in semiconductors. It was a red day on the markets. The markets barely clung to a gain from Monday's rip, and Thursday, Friday gave most of it back. So, sensitive to any type of pullback in these stocks, any type of heavy profit taking, they're large enough to move the entire market. So that's the bad part about highly concentrated. The good part would be they're leading the way. And, we're riding the coattails of very few stocks right now, but it is what it is. It can keep going, and you don't want to call it the top, although we have mentioned, weekly it makes sense. Technically it makes sense. But I still think that if we're seeing, 31 high, I think it's 31 all-time highs this year, 31 all-time highs to this point. And historically, that's pretty darn good. If you look back to some of the better stretches, we've had 60, 70 all-time highs in a single year. And those were, pretty darn bullish years. So we're up around 14, 15% net on the S&P, around 15, 60% net on the Qs. Dow is clinging to single digits still. Russell's still flat on the year. And there's still half a year to go. Time to be concerned? Time to play defense and have a little protection? Yes. So for me, that's pretty much my plan. I'm still trading, still grinding. I still have a slightly bullish outlook. And I say slightly, I'm cautiously bullish, but I'm just playing a lot of options. I have a lot of protections on my own positions. I put a lot of collars on the last couple of weeks. So that means I bought some protection to the downside, but I also have the stock covered in case it goes up and I can get called away for profit. Last week, by the way, I want to check. I think CVS finished end of day positive above. CVS. Yep. So we finished at 61.37 last week. I had it called away at $60 for about a $5 flip. It was like $580 per account last week. So made like $4,000 or $5,000 on CVS last week. Cool. Do I want to get back into it? Nah. I'll look to see if we retest the lows. Let me go to a daily chart here. I will set a chart alarm. I thought I had one. Maybe I used them all up. Let me go down here. So let's go $54 on this chart alarm. And I'll look to start over on CVS. Earnings-wise, said we have a couple notable earnings this week. Nike, flirting with some trendline support. Maybe a play on Nike this week. Micron, MU. This is in the semiconductor space. Really can't do anything wrong, but look at Thursday to Friday last week. 157 all the way back down to 139. That's a pretty big drop and sell-off. With that type of increase in volatility and earnings coming up, I do want to know, are we going, higher or lower? Do we continue to see a big move out of the semiconductor space, or was a big drop kind of put into the market's going to stabilize through earnings? So, I'll probably price it out this week. I might do some credit spreads on these plays. Let me see if we can get back into this, equal weighted level. There we go. Support on 110. What are the ones were notable this week? Carnival Cruise Lines, FedEx. Okay, let's take a look at those. And then we'll switch over to dollar, oil, gold, silver, some crypto, some currencies. CCL trading at 16. I'm just going to look to see if we hit the chart alarms to the downside. FedEx trading at 253. I'd say dealing with some indecision in here. Certainly a good post for FedEx could be up towards, average move on the week is around $13. So if earnings is going to be a little bit higher than that, I can check the IV rank of FedEx, but still pretty choppy as far as, no fresh breakouts or anything like that. We've got some pretty big volume coming in over the last couple of weeks. So NVIDIA leading the way in a big way. Average volumes are 440 million shares. Tesla, 89 million shares. Apple, 65 million. S&P 500 right just shy of 60 million. GameStop, 47.9. That's unbelievable. Like, the fact that people still care about GameStop is crazy to me. MARA, that's a Bitcoin mining company, 46 million shares. Amazon, 38.5 million. Pfizer, 38 million. The NASDAQ, 37 million. Wow. NASDAQ is just over half of the S&P as far as average volume. FXI, there's some, that's Chinese long-term or Chinese large cap tech. Yeah. Large cap ETF. China had average volume around 38 million, and Carnival Cruise Lines 30.66. All right. So anyway, just some notables, and I'll keep a close eye on that. Let's see. Or anything else? Biden's admin banning Chinese investments. I haven't heard about that. I know that that's always the concern with investing in China is, the U.S. could put on sanctions and try to. I mean, if we ban like ADRs, I mean, look, I just my opinion. If we want to play tough against China, they have plenty of leverage to fight back as well. I mean, it's world number one, world number two. I still think I think it's optics. I mean, I think China needs us. We need them. Nobody wants to admit it, but the reality is there's a reason that we're number one and number two. They make stuff, we buy stuff, and optically it's like we're adversarial, but the reality is business wise, most companies, produce things in China. Most people buy things from China. And if we're banning investments, I mean, that's probably not something that China wants, would be to pull Western money out of them. I think that's one thing they would gladly accept would be Western money. But there's obviously things that, we can't control, and that's why it's still calculated risk at the end of the day. So look, I have exposure. I mean, I'm trading FXI, KWeb, Baidu, Baba, and that's pretty much the extent of my exposure. But it is something I'm watching. I definitely hope that we all of a sudden just don't see that all of a sudden they're delisted. So I think there'd be some big ramifications for that if that was the case. Daniel says I lost 30K when you put a ban on Russia business. Well, I mean, that's why I trade options. So I'm not saying I can't lose 30K. I'm saying that there would be defined risk up front and not yeah, I mean, look, I got really lucky in forex trading when I traded the Russian ruble quite a bit. It was a very illiquid currency pair, but I was getting positive swap. I was finding pivots, every couple of weeks. But this is the one thing, and this is one rarity. I actually had a representative from the broker I was with at the time reach out and say, "Hey, in about 3 weeks' time, we're going to be removing the Russian ruble from our platform. So just, I know you have a position in it. You might want to take a look and see how you can manage that." What? So I actually got a heads up, which was, I mean, looking back in hindsight, I really appreciate that because it would have been, I mean, I was down like $300 or $400. I was trading, mini lots or something on the Russian ruble, but it would have been thousands of dollars within that 3 week period of letting it run, getting worse, and then all of a sudden it's delisted. And what are you going to do other than just take a loss? So yeah, but stuff like that, I mean, that is considered. I mean, in a way, I don't know if that's considered systematic or non-systematic because that's, two governments deciding what you can and can't trade, and then all of a sudden that filters into investments. I don't know. I mean, I like I said, I think it's optics. So we got to be tough and play hardball with China in the news. But like I said, there's a reason there's number one, number two. They make stuff, we buy stuff, and that relationship has been like that forever. So I do think it's in China's best interest to continue to do things to accept Western money, whether they need us or not. Maybe I don't know who needs who more. I don't know. You'd almost think the U.S. as a consumer nation probably needs China more than they need us. But I could be wrong because when they make stuff, they want buyers, right? That's how they flourish from a manufacturing sector standpoint. Anyway, let's move on. But it's risk. Bottom line is risk, just like Dana said. It is. It's risk. Got to be aware of it. That's why there's disclaimers, right? We sign up as traders. We're taking on all this risk. All right. All right. Let's do a little top down. So dollar index, 105.60 continues to be the level. Look what happened on Friday. Okay, so Thursday, Friday last week, dollar rips up. Today, dollar's down. We're still not breaking 105.60. I'm telling you, this dollar is a freaking mess. If we can't firmly get above, and I hate it that it's like, I keep saying firmly above, but this isn't firmly above. Getting 1 or 2 days and then fading isn't firmly above. I will probably not get the participation that I really want on the DXY. I probably won't get the best entries that I want, but I'm still looking at this 103.90 level as support. We've been going higher. Just possibly expect some. If we can't grind higher on the dollar, or we don't see risk off trading to nudge the dollar higher, then expect this to stay in a range. And we are going to deal with some sideways chop, just like we did back here. Now, the nice thing is if the dollar chops around, there is a directional play coming soon. I don't know when, but if we go sideways, expect it to break out and go somewhere. And that could be a big move one way or the other for some dollar basket trading. Right now, I still look at these levels as I'm just not convinced we have great setups on the dollar basket as a whole. We don't have a lot of direction on the dollar as a whole. Currency strength today, let's take a look this morning. So we have dollar weak, euro up, yen pound up, Swiss is neutral. Everything else is pretty quiet. Swiss last week cut the rate from 1.5 to 1.25. Happy to see that. We continue to see monetary policy divergence where Swiss is at 1.25 after 2 cuts. The Bank of Canada cut rates. The European Central Bank cuts rates. The Bank of England held at 5.25. The U.S. for July is expected to hold. There's no FOMC in August. September is still that potential rate cut. This is what the watch tool expects to see. We refresh this. 90% that they do nothing in July, nothing in August, 60% still holding for September and December, possibly another cut. So per the market, September, December, 2 months to cut. Obviously, you throw an election in there for November. Things get pretty wild and crazy. Whether the market's loving the fact that we're still cutting rates, inflation will trend lower. We're going to find out. So as we get into July, so like I said, this week, Friday, end of the quarter, end of the month, kick off the first week of July. We're going to have some holiday trading. So we still have non-farm payroll on July 5th, which says bank holiday Thursday, the 4th, but Friday looks like the market's back in action. Non-farm payroll with some expectations. No forecast as of yet. But I'm looking to see where is our big inflation data. CPI and PPI, that kind of combo week. Let's see when this is dealing with the Fed as well. So we have Thursday the 11th. We also have a cash rate decision from the New Zealand dollar for the RBNZ on Tuesday the 9th. Thursday the 11th, core PPI, CPI, I'm sorry, core CPI, month over month, year over year. That'll be a big one on the 11th. Going to the next week, the 18th will be ECB. I'm looking for more U.S. stuff. Retail sales out of the U.S., CAD CPI. So it looks like the week after that, end of July, is going to be your Fed. No? What the heck's the Fed? Oh, it's the end of the month. Wow, end. So all the way to the end. Where's my calendar? So we're getting all the data through the month of July before the Fed at the end of the month. With press conference, with the data in there. Okay. So CPI is on the 11th, and then the end of the month is the Fed. All right, fair enough. Okay, so that's where I'm at with the dollar. Let's go oil, gold, silver. Oil, 80.32, pulling back a little bit. I had said based on this recovery, so here, right side of the trend line, if oil pulls back a little bit, makes some sense, but oil pulling back into this area, I think is pretty well supported, holding above this level. Maybe some indecision, and then oil, we're looking to see if we're going to start seeing a trend. Maybe this is a low to high swing. This is your turning point, and then we're looking for oil to possibly head back up into the high 80s or 90s. We will see if it clips this high, if it hits resistance. You got to wonder if oil does find some traction to the upside and heads up there. You got to wonder if this level is going to hold, and you got to wonder what inflation numbers are looking like if oil's ticking higher. If all of a sudden gas prices at the pump are going higher, that's not good for U.S. inflation, right? That's not good for U.S. consumers. That's one spot that people feel it. That's one spot that's never noted because it's considered, not core CPI, right? That's not everything excluding food and energy. Well, that's what everybody pays for every single day. So if oil goes up, we're going to feel it, but the Fed's not going to talk about it because that's not core, because that's excluding. Creative accounting. But I'm bullish on oil for right now with a position in crude oil futures and looking to see if I can just take the swing. Crude oil futures would be ticker CL. And if we stay above 72.50, I am good there through August. Gold and silver. Gold is at 23.27. This is, so a couple of patterns that I'm watching here. Either this is a broadening pattern for some type of chop and indecision after this big rip we saw through last fall and early this year. So we had some indecision. We had a holiday fake out, consolidating here, and then gold just went nuts to the upside. Give me 1 second. Okay. So either we have some indecision coming where it's just more of this chop around, look to see if the support level holds around 2300, 2275, or potentially the concern would be that this high is creating a neckline. I'm sorry, low. This low creating a neckline, just a little bit different from this left high to this center high. So is this a head and shoulders pattern? Maybe, maybe not. If we don't go too much higher than, let's say, 2400, we could see gold lead to more indecision. If we end up breaking south, then obviously we're starting to see the materialization of this head and shoulders pattern, and we'd be projecting gold to possibly head down towards 2160, 2140. Two ways to measure it would be, let's say we go high to low, lower high to lower low. That'd be symmetry. And then you can do another wave from there and then project kind of a bottoming area. Or you take the head to low or the high to low and you measure out the projected move from the neckline. So somewhere it lands us, like I said, between like 2160 and 2120 would be my kind of support zone. And I'd certainly be interested in buying some more, probably buy another tranche of GLD if that was the case, if it did break that level. But I'm expecting mostly just some containment right now, some sideways movement. Broadening patterns can be a little difficult because it looks like the bears want to threaten every time. It looks like the bulls want to threaten every time. So anyway, that's where I'm at on gold for right now. I still like silver better. I've been very vocal about that. Coming into a pretty major trend line, I would really like to see silver head higher. One thing I'll possibly end up looking at today is some silver. I might look at silver futures and throw on a couple of credit spreads, or maybe just go out. Let me see what I can get on time. Maybe buy a long call or just do some credit spreads with some time on silver futures. Something pretty easy, pretty risk defined. Add a few more bucks to my silver position. My core position's in SLV, but adding some SI, which is going to be your silver futures, or maybe do some micro silver if that, I think it might be MSIL or MS, something like that. Let me see what that is. Micro silver is SIL. So the /SI/SIL. If you want to take something small, I should be able to do this /SI. But anyway, I like silver. And again, we could pull back, but as long as I'm looking at silver, or let me go to the silver futures feed here, as long as we stay above $26, I'm still pretty darn bullish on silver. So we could chop around a little bit more, but if we get a break to go higher, getting position where as long as my break even or line in the sand is 26 or lower, that looks pretty good. If I want to get a little bit tighter, it's higher premium if I'm selling, doing a credit spread, for example, but it's a little bit more tested. I'm certainly not taking ownership of a futures contract. I just want to add to my bottom line. So I'll probably say out of the money with a futures contract with a credit spread. SLV, I'm still willing to own and wanting to own. The share price is sitting at 27.05. I have a 29.876 all puts. So if I get assigned on anything, I'd get assigned. This is out to July, by the way, so I still have some time in this trade. But 29.876. If it is right now, I'd be assigned at 28 and 29, but nothing else. So I'd own 200 shares, or at least have two of those put contracts fulfilled, and I'm good with that. NQ, sure. Intraday, I mean, let's go to this. This is probably better feed for the NQ. So NASDAQ has been down. Let me take a look at my options platform, look at some gamma levels. Let's go out here. Okay, so if I'm looking at, oops, see if I get a futures feed. I think it's a delayed futures feed on this one, NQ1. Fudge. NQ exclamation point. I need to know what the sign is. Well, let me just start with this. So we're at opening bell, pre-market levels. We're trading at 544 right now. We've got some to the downside, some to the upside. 550 this week I'd be watching for to the downside if we start to fill these up and light these up a little bit. Anything that sticks out this morning, looking to hang out and hover right around maybe 545. Let me look at a trade on the Qs. This is probably not a bad spot just to get settled in here. Let me get into my Tasty account, log an SPX trade, see how that does. I could see price again. Mondays usually aren't super directional. Last week was very different to have a big directional day on Monday, but the market just decided to do it. So I felt like that was the pent up trade from the week before when we had CPI and FOMC and PPI, and the market decided not to do anything from Wednesday, Thursday, Friday's live trading. And you get into Monday, it's like, oh yeah, we forgot to move last week, so here you go. And that was last week Monday. So I'm going to look at pricing out a trade on the SPX. $5.44. I mean, part of me is somewhat interested in doing like a butterfly spread today. Not a broken wing, just a butterfly spread, trying to kind of hammer out this 545 level, see if price bounces around on it. I don't see a lot of levels. I mean, 545 is the big one today, and some of these others are starting to stand out. But yeah, if it's going to be a choppy sideways day, 545 would be a good spot. If you were doing a butterfly spread, so you sell two contracts at the 545, go equidistant, so you pay a small debit for it, either SPY or better yet, probably the SPX. Let me see what these levels look like. So SPX has nothing in the middle. SPX has 5450, but gamma level size is pretty low, and all the way up to 5500. I mean, I don't know. I see it more likely drifting lower, but I just contract or the sizing, the volume level is not massive. But if I wanted to test it, that would be a butterfly around 5450 today. But I think the SPY looks a little bit more straightforward. Let's see something here. So SPY 545. Look, price is pretty vulnerable. If we go to a bigger time frame here, price is pretty vulnerable to a break below 543 on the SPY. We still have this CPI gap that has not been filled. Price is hanging out with just some sideways movement. Really, really choppy right now. Last couple of days outside of Thursday's sell-off has been sideways. This was Monday's direction. Tuesday, nothing. Wednesday, no trading. Thursday, sell-off. Friday, chop. Today, if it stays the same, like I said, downside if we break the lows around 543, vulnerable to come back and fill the CPI gap. Okay, if we hold here, then we're just going to chop around, stay around this 545 handle. So probably trade I'm look at this morning would be if I did let me check so if I did a SPY butterfly 545, let me see what that charges me. So if I did I do this with a 0 DTE. 545, that would be a long butterfly spread. Come on, Tasty. All right, I'm going to close it down, open it back up. Yeah, the NAS. So, like I said here, I mean, the Qs are probably more vulnerable. Again, CPI gap is probably noteworthy if we go from high to low. I mean, if you're watching this, look at your watch list from like semiconductors. On my Tasty platform, see if this logs me in. Now I get to log in again. If you just want to do at a glance, I mean, last week on Thursday, it was all semiconductors in red and the market was down. That pulled NVIDIA with it, that pulled semiconductors. Tech is a bit more vulnerable, slightly more volatile. The CPI gap would be my pullback. Again, I don't want to call. Here's my easy trade. If we put the CPI gap, I look for some buying opportunities there. That's pretty easy. I'm not really a bear on the NASDAQ or the Qs unless price is going to break this trend line. What I could see happening is price staying here, just like we did over here before it finally broke. So if we break this trend line, which I'm noting this slightly more aggressive inner trend line, I want to see what price does. So between this recent high and the CPI level, if we came to test CPI, I'd still be a buyer. If we went sideways, right? We went sideways here. The market's got to break the trend line. So I don't expect necessarily higher highs. I don't expect a lot of volatility one way or the other. I could see the market just being pretty calm over the next couple of weeks until we get into a bigger earnings season as we kick off Q3, get some more data. But CPI to me would be a gap fill that finds some liquidity, but also offer up a chance to buy a dip and see if the market's satisfied with maybe a decent correction. That pullback from these highs, that would be about a 3 to 4% correction on tech. So that'd be your QQQ or NQ, kind of the same idea, right? CPI gap. I can see E-mini futures on the NASDAQ filling CPI. Trend line wise, here's a pretty simple spot right in there. So that's my support zone. If we pull back, fine. Fill the CPI, fill some of this pocket from this candle here on the 12th of June. Pull back in this area at 19.2, 19.3. To me, that's a buying opportunity. So I would look to see if we fade a little bit. Daniel, I know you're way more short term, so if you get some price action on the downside, one thing you can always look at is kind of an opening above range. So right now, 938 price is, let's go NQ. Price has already been down on the day. We broke this recent low, but pressure remains, right? Look at this. Look at this structure right here. If we take out this low, we're opening up some room for the bears to move a little bit lower. And where to? Probably the CPI gap. So somewhere back in here, right? So this was the CPI news on a stock that this is a big CPI gap. But we have also a big gap here post CPI. So if I'm looking at NQ, that's what I see. Maybe some gap filling, maybe some demand zones, vulnerable with a fresh break to the downside. And, look, a pullback is okay. A pullback is freaking healthy. It'd be nice to see a pullback for once. And to what degree, I don't know. Maybe 2 to 3% would be great. Maybe that's all the market's going to give us. We get something steeper and more volatile, 3, 4, 5%, 7%, 10%. I think 10% is unlikely. I think we're going to see a bunch of single-digit pullbacks, and we're going to see some sideways movement. So my thoughts, at least for right now. Okay. Let me go back to this price action here. Yeah, I was going to look at a butterfly spread in the SPY. So 545. This keeps happening. All these little like tiny black something with my platform. Anyway, if I did a butterfly spread, call spread would be okay. I'd want to move this down, down, down. I'd pay 20 cents for the debit, possibly offer up about 4 to 1. If I'm right, if we hang around 545, open this up a little bit more, pay about 60 to 70 cents. That's your max risk, but you can go 2 to 1 if you're right. If we hang out at 545, I don't love that. I mean, it's 2 to 1 in the day, which obviously isn't bad. If I get a little bit more around current price, right there, you know, just over 2 to 1 if it hangs around 544. To me, 545 is the gamma level. So I like a butterfly spread like that. It's going to cost about 65 to 70 cents for a potential double up in profit today. That's just if we hang out at 545. So for that trade to be profitable, I need to see price just stay right around 545. Next price I want to look at would be SPX. I'm going to get this one priced in on my spreadsheet. So I'm tracking these 0 DTEs. Today's the 24th. Current price, we're trading at 54.62. That's a tough one because it's right in between the two strikes. So if I did, let's say 65 to 85, or look at the delta, that's an 18 delta. I'm going to do a 54.90, which is a 13 delta. So I sell the 54.90, and then I do let's say a 12 delta here, and then 20 points wide to make it synthetic, and 35 to 15, 20 points wide. That's it. Man, IV at 19, and I'm only getting 235 for this trade. Fudge. Max loss 1765, max profit 235, but that's the way it reads right now. So 230. This would be a 5462. So we're looking at 5460, 5465. So the -1 would be at, I'm doing a 5490 and a 5435. So $2.30 credit. Go after a tight profit. 2.30 times 0.15. You're looking at a $34 to $35 profit. Minus 2.30. So 195 debit would be the profit target. Okay. So just tracking some SPX and some SPY this morning. If pressure amounts to the downside, that's okay. I've got a neutral position in right now on Nvidia. See if Nvidia has any big levels here. So Nvidia right now, 130, price gap lower. This is intraday. Anything here for pre-market? So yeah, 130 is my big level. Pretty good size on that gamma level as well. So 120, which is much closer, or 130 for today. I do have a trade running on Nvidia for this Friday to get a little quarterly expiration. Okay, let's do this. It's 9:44, I believe. Let me check with A1 Trading team. Yep, I'll be jumping in with them around 10 o'clock. So if we want to take a small break here from the Pulver Report, come back onto the channel, youtube.com/Chris Pulver at 10 o'clock. I'm going to jump on and tag team with Nick and Frank and the A1 Trading team. So we'll talk for a couple more minutes. I did get through oil, gold, silver. I didn't take a look at Bitcoin. Let me do that really quickly. Bitcoin. Okay, Bitcoin. Well, I've said this last week, 60K and 55K, that is a very important spot. Trendline support right here, watching this equal low. 60 to 55, if the market wants to make something of this, and again, maybe it's a range opportunity, right? If we pull back into this area here, maybe look at I could look at a credit spread on Bitcoin futures. I can obviously look to throw in another position. I think I'm kind of good on Bitcoin right now. I'm okay. From leveling in between $3,000-$4,000 to $15,000-$16,000 to $32,000, I'm fine. Obviously, I wish I put a lot more money into it as it doubled and tripled over the last couple of years, but it is what it is. And I'm looking at this potential range trade. Bitcoin eclipsed all-time highs. Ethereum did not. So The one thing that we have to realize is I don't think Bitcoin is going to just stand alone on its own and be this island of like, well, Bitcoin's outperforming. It's going to be tied in with the Nasdaq. It's going to be tied in with the SPY. It's going to be tied in with the risk appetite. Which again, this is the divergence we're talking about. Dollar's been up, but not convincingly bullish. S&P and the Qs have made all-time highs and notched a lot this year to make some really great starts and good, historical significance. But there's a bit of a cause or a pause for concern simply because it's so highly concentrated, and you're not seeing the Russell catch up or trade the same. You're not seeing the Dow trade the same. So you could argue that this isn't exactly the healthiest bull market because it's so narrow. So, like I said, I would kind of like to see a pullback to see if the market is interested, and then looking for a mass buying spree. Maybe the broader market's willing to buy a dip if the market gives it to us, because right now the only thing we're buying is essentially, Microsoft, Apple, and Nvidia. If you're long the SPY, you're long those three. If you're long the Qs, you're long those three, right? If you're long semiconductors, you're essentially long Tesla, or I'm sorry, long Nvidia. So that's not a bad thing, because those stocks single-handedly are carrying a lot of the performance this year. But Bitcoin is down. Risk appetite is it's not just unanimous. So it seems a bit fragmented. I'm watching Bitcoin closely. I do think there could be a bit of a bear trap, so I'm watching for that to see if we test 60K, test 55K, maybe poke the trend line. Everyone say, look, it's breaking the trend line, and then it goes rip right back up, and we range back up to the highs again at 70,000 plus. So if we're sideways on Bitcoin, I could see that play, like a little bit of a fake out and bear trap, and then the market takes it right back to highs. I would like to see this posture, lead us to some type of all-time high in Bitcoin. And again, broad market risk appetite, that would be, I'm sure, very exciting for a lot of crypto traders, buyers, holders, whatever. I'm one of them. Ethereum, same thing. Potential trendline support. This previous structure right around this $3,000 level comes into the same levels. Looks like it's breaking a trend line, but instead holds the low, and then maybe comes right back to the highs around 4,000. So watching those very closely. Chart alarms are set, highs and lows, to see what they hit. We'll talk currencies for a couple minutes, and then I'll switch over to A1 trading here at the top of the hour. So currencies, Aussie CAD, I'm still bullish. Swiss, let's see if the carry trade starts to kick off since the Swiss National Bank cut. RBA held rates the same. We're getting a nice little trend line break on some of these U-turns since we had the Swiss National Bank rate decision. Aussie, Japanese yen broke the intervention highs by a decent amount. What happened to the dollar yen? Did the dollar yen break above 160? It's right there. This is another spot you got to pay attention to. If 160 on the dollar yen, I'm looking at the Nvidia's heading down a little bit. So last week 127 down $5. I've got a position on Nvidia. Let me see here. So Nvidia, I have some broken wing butterflies. My trade for this week is 1, 2, 3, 4. And then I have some ratio spreads. What's this trading right now? So I bought in for 675. It's trading at 670 right now. This is break even. See if Nvidia wants to drop another couple of bucks. My long put is a 61 delta, so another couple of bucks. That should be another. Let's say it drops $2. I should get. Let's see. I mean, over $1 of that. So I hopefully can turn this into a $7.50 to $8 credit within maybe a couple of days if Nvidia continues to sell off. And just really quickly, just going to go back to that. Nvidia, 117. Previous highs around 116. Yeah. Pressure's on. Pullbacks would be nice. This was a decent pullback here, right? We had about a 20% pullback, and we've got to be in the teens right now. We've had about a 13% pullback. So if we stretch into like 20+%, good. Let's see if we get it. I'm looking to own some Nvidia. If I can own it, I'm going to own it around like $77 with a couple ratio spreads. So, I mean, that's pretty good for me. But otherwise, I'll see what the little reverse iron condor is that I took last week, and I'm trading out to this Friday, and then I've got one out to end of July, August as well. This little pixelated, tasty platform is bugging me a little bit today. So I want to make sure this is all accurate. I'm getting the proper feed. All right. I think we're good. We'll take a little break, wrap up the Pulver report here, come back in for a bonus segment at 10 o'clock. I'll jump in with the A1 Trading Team. I'll stream from youtube.com/Chris Pulver, and we'll see you in a little bit. Okay, so jump back into the channel, grab something to drink, take a quick stretch,